Hello, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Today is August 12th, 2019, a Monday. And, let's get everything started here. First, let's open up the charts right here and take a look. Now, if we have a hard Brexit, these are the projected job losses. Look at this. 526,000 jobs lost in the United Kingdom. And all the rest of the European Union, each country is going to take heavy job losses. So this is not a cakewalk. Now there's another thing I want to point out to you guys. Right here. Whoop, let me refresh the page. There's an asteroid warning. Right now. It's a space rock. And it's the size of the Great Pyramid of Giza. Now, there's been a lot of these lately. An awful lot of them flying very, very close. One of them, I think, came within 6,000 miles of the Earth. Nearly hit us a few weeks ago, And there's been one after another lately. I wonder what's going on. Maybe we're going through an area of space that has a lot of asteroids in it. I just don't exactly know, but I just know there's been a lot of them lately, and we could get hit. And if we get hit, it could be a huge. It's terrible. Let's take a look now at this article, and I totally agree with this article. It says the calm before the storm. Last week's market volatility was extensively triggered by the U.S.-China trade conflict turning into a full-blown currency war. But at heart, it's all about the inability of the Federal Reserve to convince us that its July rate cut was merely insurance to protect against a future downturn. Any number of indicators now show, from weak purchasing managers indices in the United States, Spain, Italy, France, and Germany, to rising corporate bankruptcies, and the spike in U.S. layoffs, the global downturn has already begun. Asset prices will undoubtedly begin to reflect this, and possibly quite soon. China may have temporarily calmed markets by stabilizing the renminbi, but we are in for what Ulf Liddell, chief executive of A.G. Bissett Associate Currency Research, calls a summer of fear. He expects a mean reversion in the Dow that started in January to turn into a bear market that lasts a decade. He says, in opinion based on data is not emotion, there have been 20 months since 1906 when the Dow deviated from its trend line and has been 130% or more. But it is today. These periods cluster rather frighteningly around the years 1929, 1999, and 2018. U.S. equities are at the second most expensive period in 150 years. Prices must fall. He says, I don't think it's a question whether we'll see a crash. The question is, why haven't we seen one yet? And he says there's plenty of worried market participants. $14 trillion hoard of negative yielding bonds around the world. We're in totally uncharted territory. The crash that occurred in 1929. This could be even worse, because there was a lot of factors that led to the crash of 1929. There's 10 years of them taking on margin debt and pumping the stock market up to unbelievable heights. But we're in just as bad a situation right now. I want to show you something real quick. This might be our black swan. Quite seriously. If the situation erupts, it could be our black swan. And it could erupt in the next few days or next week. Keeping my eye on it. I think I'm going to do a show on it on my other channel. And if I do, I'll put a link for you guys in I might do a show this afternoon, but not about this. I'll do it on the other channel if I do a show about this. But I'm telling you, troubles. So now let's take a serious look at the markets themselves. Let's take a look at silver. 1692 bid, 1702 ask. And we're seeing it's made a new range for itself right now, around $17. Gold has made a new range for itself right at 1500 or more or less. 1502, 1503 ask right now, so it's running right around 1500 bucks. Gold and silver have been running nice and hot lately, you know. Actually, they're still cheap. Seeing what's coming right now. I've never seen so many situations in the world. Unresolvable situations. Never seen it like this before. It's starting to get a little bit scary, to tell you the truth. You know, I've never seen anything like this before. You know, in my life, I've never seen anything like this before. Let's take a look now at cryptocurrency market capitalizations. $296.6 billion. Cryptocurrency is just sitting there waiting in the wings right now. It doesn't know what to do. The market doesn't know what to do right now with cryptocurrencies. I can see a turn up coming in cryptocurrencies on the next rate cut. And I think it's going to be a 50 basis point cut. And I think it's going to be a little bit shocking because I don't think they were expecting a 50 basis point cut. They're expecting another 25 basis point cut, but I think they're going to get a 50. That's what I think. You know, and I think that's coming. Let's take a look now. Let me see if the Dow's open. Yes, it's open. So let's take a look at the Dow Jones today. She's down 192 points, and that's only to be expected. I think it could be down over 500 points by the end of the day today. Quite seriously. Today is not going to be a good day for the Dow because they're starting to realize all these problems that are occurring in the world. They're starting to realize them. It's starting to dawn on them. Hey, you know what? We're not in La La Land anymore. It's like in Dorothy the Wizard of Oz when she stepped out. Except this is the opposite. When she started, you know, in the Wizard of Oz, it was black and white, you know, and then she stepped out into this wonderful, beautiful land of Oz, and it was all sunshine and colors, you know, beautiful colors and everything. This is the opposite. We've been through the land of sunshine, and now we're stepping out, and everything's gray and bleak. It's exactly the opposite of the land of Oz. Let's take a look now at crude oil prices. Down 24 cents on the day so far. You know, we've got to keep our eye on crude oil. This is an oil-based economy. Everything functions off of oil. And its underlying asset in this economy is gold. So you got gold and crude oil, two biggies in the market. Let's take a look now at U.S. Treasuries, and this tells the tale. You know, we see a yield curve inversion extending all the way up. Oh my goodness, the 30 years dropped below 2.2. It's 2.18. Oh my goodness, look at it drop. Everything's dropping on these yields. On the whole long end of the yield curve, just dropping right down like a stone. This is an indicator. You know these guys, you get these guys out there, these talking heads, and they say, we don't see any sign of a recession until 2021. Oh my gosh, are these guys blind? Are they like the ostrich that's got his head stuck in the sand? The world's coming apart at the seams. We've got a dozen different things out there right now, each one like black swan events that can bring the markets down to its knees, and these guys are just totally oblivious. Let's take a look now at U.S. dollar index. 97.38 on the U.S. dollar index. It's dropping a little bit this afternoon. That's a plus for gold and silver. More of the U.S. dollar index drops, and I think it's going to start to slowly ease back down again. The more gold and silver are going to get a boost, you know. What was this part? Oh, this is what I started the show with. The job losses that are coming to Europe. Heavy job losses all the way across Europe. And these are big numbers, you know. And it might be bigger. This might be an underestimation of how much it actually, when the impact really hits, these job losses might double from what we're seeing on this estimation. Listen, thank you guys for listening to this report. Stay tuned for more. And we'll catch you guys in the next show. And give me a thumbs up. Thank you guys very much. Bye-bye for now.